Hi, everyone. Welcome back. Welcome back. I'm Dave Grimaldi with the Blockchain Association. Thanks, everyone, for being here today and attending our sessions. For those of you who don't know, Blockchain Association is a 100-plus member organization based in Washington, D.C., representing all sectors of the blockchain and crypto and digital ecosystem, from mining companies to venture funds to exchanges, NFT companies, and we are on the front lines between the federal government, state governments, regulatory agencies, and our industry. So never a dull moment as we enter a brand new Congress, new congressional session in DC, where many issues will be discussed following a very busy, as we like to say, end of 2022 with a lot of fun and adrenaline and drama. And today, though, the topic is emerging energy, incentivizing a greener future with crypto and blockchain, and there is no better panel to tackle this and talk about it than the individuals to my left who will be going over everything. And I'm going to turn it over to Sochi Kadzador from Cello to kick us off.
Thank you. Welcome, everyone, to Emerging Energy and how we might incentivize a greener future with crypto and with blockchain. As many of you, I'm sure, are aware, we are in a climate crisis. There are life-threatening issues that are impacting biodiversity, our food chain, and displacing local communities. The World Economic Forum recently cited that one of the most pressing challenges that blockchain could address is climate change. And I couldn't think of a better group to be up here with today, individuals that are in the blockchain industry that are committed to tackling this problem. So I'd love to start by turning it over to our panelists to introduce themselves and speak a little bit about the projects they represent.
Hi, everybody. Thanks for being here, and thanks, Sochi. My name is Kat O'Brien. I'm the Chief Partnerships Officer from Climate Trade. We are a company that helps companies, organizations, and associations to reduce their carbon footprint, as well as for their customers or clients to do so. So we work with companies to make it as simple as possible to offset their carbon footprint. We have a variety of projects, all certified from around the world. And then we can also integrate with companies or their websites via API or white labels such that their consumers can offset their carbon footprint. So say your trip here, your hotel, you could do that if we were working with the companies that own how you traveled here. And so our goal is to help people to do their own part for making a more sustainable future. And we use blockchain, so that's how we're part of this. We use Algorand.
Hi, I'm Bill Kentrup. I've been based in Asia for about 22 years in the environmental commodities space, so for about 7 years with a multinational commodity group running the environmental commodities business, carbon credits, biofuels. For 8 years, I ran environmental infrastructure and environmental products for a bank, and then the recent years set up All Infra, my company, with some co-founders. And what we do is we build institutional tools for carbon finance, so things like digital securities related to carbon futures rights and digital certificates for green bonds, together with digital verification of the impact of those financings. That's our company, All Infra. And I moved just a few months ago back to the US, so we're just getting our feet on the ground in the US. Still, much of our business and carbon finance activity is out in Asia Pacific. Thanks for being here.
Hey guys, I'm John Michael Hans from Chia Network. So Chia is an energy efficient blockchain. You guys might know our founder, Bram Cohen. He's most famous for inventing BitTorrent. So Chia is really interesting because it's a blockchain that uses storage space to secure the network, unlike proof of work or proof of stake. So we are a brand new consensus mechanism, but we are spending a lot of time in the carbon market space, sustainability, and hardware circularity.
Great. Glad to be here. My name is Cully Cavness. I'm the co-founder and president and chief operating officer of Crusoe Energy Systems. Crusoe's mission is to align the future of computing with the future of the climate, and we're really building the physical infrastructure that's at the intersection of energy and computing. So we do this in a couple ways. We started by going out into the oil fields and capturing flaring natural gas that was otherwise being wasted and burned incompletely, releasing a lot of methane to the air. And we capture that generate electricity with it, and we deploy modular data centers right into the oil field to use that otherwise wasted energy. So we started with Bitcoin mining, and we've been building a second computing platform called Crusoe Cloud. Actually, Fayaz Mohammed is here from our team. We just brought him over from AWS, and that's really an AI infrastructure-focused computing platform. So on the Bitcoin side, we're probably the largest or one of the largest privately operated Bitcoin mining companies. And then on the cloud computing side, building out some HPC infrastructure that, again, taps into otherwise wasted energy, first in the form of flaring, and then more recently in the form of intermittent renewables, so wind-oriented grids where they require some curtailable loads as the wind comes up and down. It's very useful to balance that with loads of computing that can come up and down. So another home for our modular data centers there.
And I guess I should introduce myself as well. My name is Sochi Cazador, and I lead ecosystem growth at the Celo Foundation. Celo is a mobile-first, planet-positive blockchain that was launched on Earth Day 2020. They're with the mission of creating conditions of prosperity for all. There are hundreds of projects in the Celo ecosystem that are working on climate, whether that's tokenizing real-world assets or working on projects that incentivize planet-positive action. Which is exciting, and we'll dive a little bit into that. But before we get started, I wanted just to do a quick pulse of the room, and would love folks to raise their hands if you are working in Web3 or with Web3 technologies. A few, yeah. And I would love for you to raise your hands if you are working on climate initiatives. As well. Well, you're in the right place because we're going to dive into those topics in a second. One of the biggest opportunities of Web3 is to solve some of the coordination problems that exist within climate. Some of them are quality, transparency, basically how we validate some of the climate action. The White House recently published a study which I thought was very balanced and basically called for the need to really explore Web3 technology and how it could be used to measure and monitor climate action. I wanted to get started with just kind of really having Kat talk about how climate trade is helping companies achieve carbon neutrality.
Sure, thank you. So we want to make it simple for companies to address climate neutrality, and we work primarily with project carbon offsets that are certified by the top registries. If you're familiar with this will be repetitive, but if not, there's a very rigorous process for approving carbon offsets and certifying them. There are a few best-known standards or registries around the world, such as Verra, Gold Standard, VCS. Most of our projects come from one of those top few. There are a couple of national registries as well in certain countries. So that's kind of our bread and butter is making it easy for people to offset their carbon usage, as well as for their customers to do so. So say we work with Santander Bank, for instance, and we were founded in Valencia, Spain. That was our headquarters until a few months ago when we reincorporated in the US. So with Santander, all of their customers have the opportunity to offset their carbon footprint, and that's based on the type of things that they're buying, purchasing, spending, and Santander has chosen several types of projects, and so typically if we're integrating with a company, they'll choose projects based on their core values, their geography, what types of projects they want to be associated with. We are also doing things beyond carbon offsets, and because that's only one part of addressing sustainability. Obviously, we piloted this past year biodiversity credits, and we did that in Colombia in the Bosque de Niebla, or cloud forest, in conjunction with Terrazos. So those of you who are following may know that a few weeks ago there was an agreement reached around biodiversity coming out of COP15 in Montreal. Very preliminary, but understanding that there are some frameworks needed to protect biodiversity. So what we did in that instance is every 10 square meters that's protected is equivalent to one biodiversity credit. So again, we're trying to make it easy for people to address their carbon footprint.
I think that's like what's super interesting about that too, and like how it's relevant for a lot of the folks in this room is that I think over half of S&P companies have sustainability targets, with the majority of them having like very specific scientific measurable targets. And so it's great that you guys are tackling this and helping folks address that. Yeah.
Thank you.
Bill, would love to turn it over to you and just to kind of explore a little bit of the carbon offset market and why that's important and kind of what Web3 is doing, to help with both the market side and also kind of more broadly green assets in general.
Yeah, sure. Thanks for the question. So you have a kind of family of environmental financial products, so carbon offsets, carbon credits, allowances, claims. These are all denominated or typically in 1 metric ton of CO2 equivalent. So that's your environmental financial products. In terms of the offsets, so what that is it's a verified, through a rigorous process, as mentioned, evidence that an emission reduction or avoidance or sequestration happens somewhere through some means at a particular time. So that's what an offset is. Really the paper trail, or in recent years, the digital trail, that an emission abatement has happened. And that's in the family of carbon finance or environmental finance. So what does that mean? That means if I've financed this asset, typically through a contract, either a digital or traditional paper contract, I have the rights to claim some or all of those emission reductions or avoidance or sequestration. So the impact of this and the reason these exist and the benefit is it allows the market to find projects that have the highest probability of reducing or abating emissions at the maximum level per dollar spent. So that's kind of brings you into cap and trade. So you now have an instrument that allows me to finance a project where I get bigger bang for the buck, but how do I show that I've actually achieved that? That's what that instrument does. It's the paper trail that shows that an emission abatement has happened in another part of the world. So where does Web3 come into play? And just to mention as well, offsets are one tool in a suite of things that corporates and industries and governments need to achieve. So it's not a silver bullet that deals with all of our greenhouse gas objectives. It's one tool in a toolkit, all of which are essential. Now, Web3, you've got various approaches and various solutions out there, things like tokenization of the rights to existing credits. You've got digital measurement and verification, one of the things that we do, so putting on digital rails the evidence that this emission abatement has happened. You've got things like digital carbon accounting that are using blockchain to now look through sort of corporate claims to see that the accounting of their carbon footprint, if you like, and where they are in their trajectory to reach net zero or some carbon objective is actually happening. And a good example, and maybe a little bit of a cross-section of where this is being implemented in the real world, we were involved, and it was primarily Asia-Pacific, but also, sort of came into a couple of different regions. It was Project Genesis 1 and 2. So Genesis, both were quarterbacked by the Bank of International Settlements. That's the central bank of all the global central banks. And Genesis 1, which involved Hong Kong Monetary Authority, several commercial banks, several law firms, it was really to say, can we take the proposition of a green bond and package that in a digital wrapper so that you can take a large, very hard to access green financing, fixed income instrument, package it into a tradable small digital instrument, and use digital verification to now prove that the financing has had the effect. So prove that to the bondholders on an ongoing basis that the impact is happening. Traditionally, green bonds have a rigorous upfront use of proceeds test. Is the capital going into a green asset? But typically not a lot of ongoing evidence that the impact is happening over the years. Genesis 2, which was quite interesting, and in came the UNFCCC. So that's the part of the UN that manages Paris Agreement and previously Kyoto Protocol. And the UN had this thesis of, can we use digital to create a new instrument for carbon financing called an MOI and MOU. So Genesis 2 was, you still had the digital green bond fixed income instrument, but now stapled to what was called an MOI. MOI is a mitigation outcome interest. I have an interest in the future mitigation outcomes. Digital MRV is now reporting to the holder of the MOI what's happening, as frequently as every day, if not every week or quarter. And then finally, that's settled through the delivery of a digital instrument called an MOU, 1 metric ton of digitally delivered emission abatement. That is, in the context of Genesis 2, it's a stapled product on primary issuance, meaning day one subscription, I've got the fixed income and the rights to future carbon claims, but then immediately after primary issuance, it's separable, so it can be traded separately. And part of the benefit, other than making it accessible to a wider investor base, because now it's smaller tradable bytes, is that it's now native digital as well. So it's really easy from the perspective of now carbon accounting or green ratings or reporting to regulators or reporting up to other digital registries, which my colleague here from CHIA may talk about some of the work they're doing in that. But so Genesis 1 and 2, it kind of gives you a little bit of a cross section of one slice of where Web3 is coming into play, but in a powerful institutional context.
And I think the composability aspects of being able to leverage smart contracts as well, once we start to get a lot of this on chain, is also really exciting. John Michael, just would love, and that was a perfect segue, would love to have you share a little bit about the work that you're doing at CHIA, and specifically, the exciting work that you guys are doing with the World Bank.
Yeah, so one of the things about the carbon market is there's this trust and transparency that needs to be there. The people that are buying carbon credits know that they're from good registries, that they have not been retired before. So one of the things the World Bank tried to do with the Climate Warehouse was to create this global registry from all the countries and the other voluntary registries to basically harmonize this data by putting it in one place with a common format, common metadata. So what does a blockchain have to do with this? Well, blockchains provide a couple different things. One of those things is transparency. So we actually worked on a product that CHIA calls Data Layer, but it's part of this blockchain that is part of this Climate Action Data Trust that's part of this World Bank Climate Warehouse suite of tools. But what this does is allows for auditability and transparency of these carbon credits on chain. So now this is preventing things like double spending. So if countries are producing registries and producing carbon credits, and if somebody buys those, they can't go try to do that from another registry in another country. And then the other thing that blockchains are really good at is providing market depth and liquidity. So once we actually are able to tokenize these assets on chain, now you can create a bunch of robust financial markets, things like DeFi, automated market makers, trading of these financial assets, and to create real market depth and liquidity. So say, for instance, you're Microsoft or Exxon and you want to buy hundreds of millions of dollars of carbon credits. Right now, they have to go do a bunch of diligence to go find out if these carbon credits are good. They have to go to the registries. They have to do audits. So if these credits are now tracked in the Climate Action Data Trust, now they can be sure that these are actually real carbon credits. They came from a verified registry. And then they can be sure that when they're buying a token of that actually is the token that they are. The other thing the blockchain allows you to do is actually provide transparency when you retire that carbon credit, when they actually take that offset.
Very cool. Cully, would love to turn it over to you and have you explain a little bit more about digital flare technology and some of the work that you're doing at Crusoe.
Yeah, digital flare mitigation is the first product that Crusoe launched, and this was really it's in the physical world. Unlike a lot of the things we hear about at CES, we actually build large-scale power generation systems that very efficiently and completely burn methane that was otherwise being wasted, and a lot of it being vented to the atmosphere. Methane is 84 times as powerful as CO2 as a greenhouse gas, and I think we're talking about how blockchain has incentivized climate-oriented solutions, and I think this is one of the great examples is in the energy industry. I come from the energy industry. I started in geothermal energy and then moved to oil and gas. I'm a geologist with sort of a business and finance background. And there are these problems you see throughout the energy industry where there's a clear environmental or climate problem and there's just no economic incentive to do anything about it. So carbon credits and environmental credits are one solution to providing those economics. But along comes Bitcoin mining, and it has a significant climate and environmental criticism, which is very legitimate, which is that it's very energy intensive. And from my native energy industry, I was aware of flaring. It's just a really insane problem where we're burning more than 10 billion cubic feet of gas per day wastefully across the oil fields of the world, and that's more gas than would be required to power about 2/3 of Europe's electricity if we could capture it and use it. But there's simply no market, there's no pipeline, it's not big enough. Those kinds of issues lead to this flaring. we were able to identify that one problem could solve the other, and we brought Bitcoin mining and all of its energy appetite to the place where energy was being wasted, and not just wasted by being burned, but actually a lot of methane, about 9%, escapes directly to the atmosphere. So it's this huge source of a very potent greenhouse gas. And by bringing the economic incentive of Bitcoin mining, we could justify deploying the power generation system that gets to 99.9% combustion of the methane. So you bring down the methane, basically to zero. And when we go through our carbon accounting, we just did our first, comprehensive carbon accounting this year. We look at our scope 1, that's, emissions we produce by turning that methane into CO2 and generating electricity. Scope 2, any power we buy from the grid. Scope 3, it's like our supply chain's carbon intensity. When we compare that all and sum it up against our scope 4, which is the avoided emissions from methane abatement, we see that Crusoe as an entity is deeply carbon negative. That methane is so powerful that by eliminating that 9% leakage, it more than offsets all the rest of the emissions. And this is basically a problem where if Bitcoin didn't exist, that fireball would come back to life. And it's also given us the infrastructure to start building other interesting things for the digital economy. So Crusoe Cloud is a series of GPU data centers, the latest and greatest NVIDIA hardware, used for AI model training, used for graphical rendering, used for scientific computing, which we've been able to plug into that more than 100 megawatts of flare-powered power generation infrastructure we've built throughout 4 states in the United States and soon in the Middle East and South America. So now you have a GPU AI infrastructure that's also abating methane emissions or can be spooled up in a very renewable, clean grid to provide some interesting economic incentives there. So just back to the theme of how is blockchain incentivizing environmental solutions. This is very physical infrastructure. But it is an incentive-based system, and it's brought economics to flare mitigation, which we call digital flare mitigation.
Very cool. I think we've been talking a lot about the technical solutions and kind of some of the solutions that focused on the institutional level. Wanted to kind of spend a little bit of time talking about some of the grassroots change and kind of why that's important. So the UN published a report last fall, the emissions gap report, and the title was very telling. Basically, the title was "The Window is Closing," and we are not meeting our targets. That there is massive societal change that is needed. Wanted to spend a little bit of time. I think one of the beauties of Web3 is that it is decentralized. We have communities that are organically growing that are focused on kind of solving this, locally, and would love to open it up to the panel to kind of talk about any examples of that you'd like to share. I can dive into some as well. Yeah. Anyway.
I'm happy to maybe kick us off. So I mentioned before the purpose of Genesis 1 was to create more widespread access to smaller bites of large ticket assets, but something that's even, let's say, closer to the roots of the grassroots thematic is we implemented a project in India where we digitally twinned a fleet of electric vehicles, electric bikes. And the purpose for that was that we could then monitor the power consumption and charging and where these vehicles are charging so that you now have data on energy consumption and carbon intensity of that fleet, which then empowers the individuals to say, okay, now I've got an electric vehicle, but I've also got this carbon intensity based on where I'm fueling that electric vehicle on the grid, and I can now procure digital renewable energy certificates on a periodic basis to allow me to sort of convert my electric vehicle to 100% green powered. So some of you may be familiar with our tool in the data center space, this hourly matching digital renewable certificate model where you're on an hourly basis, in a sense, tranching consumption with procurement of RECs. It's very similar, but on a kind of micro scale, vehicle by vehicle. But if you then extrapolate that out across, lots of small implemented energy consuming assets and allow those assets to participate in green finance through these certificates, it's quite powerful and scalable. Challenging, but as well fits the grassroots kind of thematic.
Yes, I'd like to say just one corporations, a lot of people will ask me, why is a company trying to offset their carbon footprint unless they're required to legally? And a lot of that comes from grassroots because they're public, their customers are asking for things related to sustainability. And so from a marketing, a public relations, from a customer standpoint, they're making changes in some cases, not always, to address the needs and the wants of their customers. So I see this we've had large real estate companies, like among the largest in the world, banks, they're telling us that they want to be, they've been at the forefront, and now other companies, their competitors, are starting to do more in sustainability because their customers are asking for it. And so they want to do more because they want to continue to be, that's a selling point to their customers, something their customer base is asking for. You see it a lot in tourism also, with people choosing to stay at an eco resort or someone that's doing has good sustainability practices. So I see that those grassroots, the public asking for it can have big effects. And then of course we're seeing also the opposite end, where like in the US particularly, the Inflation Reduction Act is going to incentivize a lot by offering carrots, so to speak, with incentives to make changes. So I think we're seeing it from both sides, and I expect 2023 to be really big around the world, but especially in the US in terms of action on climate.
We talked a little bit about some of the inefficiencies, and I think MRV in particular, so the measurement, reporting, and verification of carbon is quite challenging. There are consultants, for those of you that may not be familiar, like consultants that literally kind of fly in to communities to basically measure that. That obviously is not sustainable. I think one of the themes of CES this year is AI, and it's actually really exciting to see some projects that are taking AI technology to sort of measure what's happening. Pachama is a great example of this. There's also kind of smaller projects like Gain Forest that are now able to kind of benefit local communities. So while like the carrots are amazing from like a White House perspective in terms of how we're incentivizing corporations, oftentimes the individuals on the ground aren't benefiting as much. And so there's projects like Gain Forest that basically is taking some of the AI and how we can reforest, let's say, like a mangrove in the Philippines, and incentivize a local community to kind of be a part of like that measurement, be a part of that verification. And that to me, I think is like really exciting. That's where you see the power of Web3 coming together, when you see all of these different pieces come together. Any other examples of that folks would like to share? Okay. Well, we've been talking a lot about, the opportunities of Web3. I wanted to provide kind of a balanced view and make sure we had a chance to kind of touch base on some of the challenges as well. And so wanted just to kind of, explore some of the challenges that exist in Web3 and how we as an industry, I think, need to address them. John Michael, do you want to kick us off?
Yeah, I mean, one of the biggest challenges in Web3 is interoperability. A lot of these companies that are trying to decide, I want to use a blockchain, I want to use Web3, there's obviously a lot of choices out there. So having protocols that are interoperable, having assets that can move between blockchains is really desirable, but it is challenging, right? Every time you try to do these bridges between one blockchain to another with physical assets, this is a huge target for hackers. And as we've seen in the last couple of years, these hackers are pretty sophisticated and will go to the great lengths. There are some good examples of interoperability, like the W3 standard for decentralized identifiers. Identity is actually one of the major blockchain use cases we've identified as a real-world use case, to be able to use your digital assets to use identity, tie it something like a movie ticket or a concert ticket, be able to tie your digital identity on your phone. Well, there are some standards that allow that to be interoperable between blockchains, so that if a company is choosing to go implement one of these DIDs, they don't have to feel bad that if they've missed out because they did it on the wrong blockchain.
Cully?
Yeah, I could just kind of add a perspective again from the energy industry, which is a challenge that I see for Web3 is this ESG narrative that I see being sometimes resisted by the Web3 community, especially around the proof of work blockchains. People might throw up their hands and say, this is just another example of FUD, fear, uncertainty, and doubt. It's a criticism that we shouldn't pay too much attention to. And I would really strongly caution against that perspective. I think, looking at the energy industry's history, you saw an industry that had a similar reaction initially to certain, initial climate science, and that really did the industry a very bad disservice, and it's had a very difficult reputational problem to solve since kind of getting off on the wrong foot there. And the reality is that there are solutions. There are better ways to do these things that have a much better climate impact and can even be a climate solution that can solve climate problems. So it's very important, I would say, to not reject those legitimate criticisms coming from the environmental community, to listen very closely to those, and then to actually find solutions and implement those solutions and point to those solutions, and just to recognize that there's a legitimate concern, but then there are also options. And if we can take that approach, we can sort of learn from the energy industry's history, which sort of provides an example of what happens if you don't take that approach, and it becomes quite difficult.
Bill.
Yeah, maybe if I can just extend on that. So a lot of what I'm seeing, and having been in the environmental financial market on the traditional side for a couple decades, there's a lot that the traditional market does wrong and does inefficiently, but there's a lot of important features of that need to be addressed and are important and need to persist. And what I see in the Web3 space, and I guess the tech solutions for climate finance in general, is that art of the possible, creative, slightly move fast and break things approach to bringing solutions to the market. And the gap that I see at times is the communication between that innovation and the Web3 community and the traditional space. And so one way, an example of a way we're trying to solve that is through an initiative we've launched called the Ethereum Climate Platform. And what that is, it's sort of, the backdrop is the Ethereum community, which, Ethereum's shifted to proof of stake, so carbon intensity has been reduced by over 99%, but we've got this historic carbon intensity actually dating to 2015 when Paris Agreement was signed. And so the community got together and said, hey, look, is there something we can do about that? What should we do about it? And what that's culminated to is this initiative where, let's say, the best of Web3, a large community of particularly Ethereum ecosystem players have gotten together, including Celo, which is great. And but we've intentionally brought into that initiative traditional players, so traditional banks, tech players like Microsoft, standards like Gold Standard, even the UNFCCC, to make sure that we've got the voice in the room from the institutional side of the market. And what we're doing is building then a suite of tools to create the most efficient environmental financing pathway, and hopefully that gets sort of taken up by other industries, but to start with by the Ethereum ecosystem. And so we're very excited about that. My colleague Stephen Haft from Consensus, who incidentally I'm sitting in for him on this panel today, he often describes it or references when a group of Porsche engineers got together for a beer in a beer garden with a group of Volkswagen engineers, and they said, look, you're good at this, we're good at that, we've got these widgets, and they came up with the Audi. And this is really an initiative where there's a lot of collaboration throughout an industry, people that don't normally collaborate within Web3, but then also across to traditional, to sort of say, let's communicate, let's build, let's accelerate climate finance together. So I think we'll see more of that over time.
Kat, anything to add? Yeah.
I would just say, I think one of the challenges isn't necessarily inherent to Web3. It's just more that when there's a lack of due diligence or kind of sussing out the viability, the stakes that something is built on. And so we're seeing examples of where that wasn't done, but they aren't necessarily inherent to crypto or Web3. They're just being illustrated in Web3.
Yeah. I think, and just to kind of segue a little bit, maybe add on to it, is I think this has been like a really interesting year for Web3 and for crypto, to say the least. And I think that one of the challenges that we have, just like to that point, and I think what many of you echoed as well, is like education. I think Blockchain Association has been doing a great job of that. Web3 is still in infancy. I mean, I don't know how many of you were around, I certainly was, like in the early days of .com, and we saw kind of what was happening there and sort of the perceptions at the time of like the internet. I think what we're seeing now now is like the same thing with Web3. And it's, I think, our duty as an industry to continue to educate, what those technical advances are, what some of those real world use cases are, how the technology is being used for good, and to really tackle some of the biggest problems like climate, among others, like financial inclusion, and a couple others as well. Okay, so wanted to kind of make sure that we have a chance to end on a positive note. 2023, we're just beginning the year. Wanted to kind of talk about kind of what each of you are kind of most excited about when you think about 2023. Maybe we can start, Cully, with you.
Yeah, 2023 is going to be a huge year for us. Mid-year last year, we raised $350 million in equity, and so we've got a lot of different investment and building going on right now across the country, and soon internationally. So it's definitely a year of geographic expansion for Crusoe, and then the big priority, the big goal for us is to launch Crusoe Cloud from the alpha stage that it's in currently through a beta and then general availability by second half of this year. And so we're pushing on that as fast as we can and building the infrastructure and building the digital side of the infrastructure as well. The existing customers we have are great, and we're just looking to add to that and make that a second sort of leg and component of our business, while we're still playing a very big role in the proof of work blockchain side as well.
Awesome. John Michael.
Yeah, I think we talked a little bit about the emissions and sustainability not just being about scope 1 and scope 2. Now companies are thinking about scope 3. One of the other trends we're seeing in this industry is circularity, which is the idea of hardware reuse, being able to reuse a piece of hardware and keep that piece of hardware in the highest value cycle throughout its life cycle. We're really proud of something we're putting together called the Circular Drive Initiative. We're partnering with storage vendors and hyperscalers to basically, if you're using cloud storage today and you're storing your data on these cloud servers, like at the end of the life of that storage device, these hyperscalers are putting that hard drive through a shredder, basically because it has private data on it. So we're creating this program to say, hey, you should probably not do that. We have this nice cryptocurrency that uses storage. The protocol's been designed to use this kind of used storage to keep this in the value chain longer. But there's a huge impact on scope 3 emissions, huge impact on e-waste. So this is one of the awesome opportunities that crypto actually has an opportunity to really materially impact the market.
So I guess for myself and for our company, I'm excited for the launch of the Ethereum Climate Platform. So our announcement at COP27 in Egypt of this initiative was the beginning, and roughly middle or third quarter of the year is the expected launch of the platform itself. And as an extension of that, I'm not sure how many people are familiar with the construct of Paris agreements, but each country has the ability to interact with other countries under bilateral or multilateral agreements to carbon finance cross-border. Thailand recently had, I believe it was the first ever transaction under that mechanism, Article 6. It was related to an electric vehicle company and the government of Switzerland as the buyer. That was a really good demonstration of how that can be done, and that should set the flywheel going on other countries' cross-border financing under Paris Agreement. And as an extension of the Ethereum Climate Platform, we're working with some additional parties on looking at what was important there and looking at the tech that would help facilitate kind of a carbon markets in a box type solution for governments under Article 6 in Paris Agreement.
So for us at Climate Trade, we only entered the US market last year, so I'm really excited about the opportunity to scale and help more companies, including as well as governments and individuals, to address their carbon footprint. And more broadly, so talk to me, reach out if your company is interested in doing more. But also more broadly, although this is a difficult economic environment for investment, climate is somewhat of an exception to this. I'm seeing new climate funds announced almost every other week. From Union Square Ventures just announced a new one, and they already had one. There's Lower Carbon Capital. There are literally dozens focused on climate, as well as the number of smart people joining to work on climate. When I was at Climate Week New York last September, I met people who had just left Google, JP Morgan, Meta, et cetera, because they wanted to work on climate. Some of them without a job, they just knew they wanted to address this. So I'm excited that there are funds, there are regulations, and there are smart people trying to work on this important problem.
We need more of that for sure. Just on that note, I think McKinsey recently published, they're expecting like the market to increase by 15x by 2030 and like 100x by 2050, which is just insane. And I think, having that smart talent, that focus on climate is going to be really important. From my perspective, one of the things that we haven't touched base a lot on is the composability aspects, a little bit of Web3. And so if we look at the last 2 years within the crypto and blockchain industry, a lot of it was focused on decentralized finance. I really am excited about this concept of regenerative finance. So how do we create financial systems that create positive externalities? There's a lot of work happening on Cello on that front. We have a block party next week. If you're interested in learning more, I'm happy to chat with folks afterwards. But yeah, for me, I think 2023 is going to be the year of refi. I'm excited about that. So I think we are at time. I wanted to thank each of the speakers for joining on stage. It's been amazing with all of you, and thank you to the Blockchain Association and to CES for having us. Thank you.
Thanks all.
Thank you.